this is one basically played from those 51.19s. Now, from an hourly point of view, you can see why that's quite a significant level. But is that enough to really go off? I'm not quite so sure. So what you really want to be looking at is you then bring it down onto a shorter time frame. And what reasons have you then got? Well, oil had got numerous reasons on this one. Lots of confluence, lots of reasons to be looking to take this trade on. I'll just bring the ladder up for you just so it's in place. So why were you looking to take this trade? Well, this was the morning's move. We dropped down and we're then putting in a bit of a B-shaped day with the acceleration below the 51.19s. So you've now got a point where the market started to accelerate from, break of a previous VPOC and a previous low. So just sort of ticking off reasons that this is a trade or an area that you'd want to be looking at. You've got a previous low of the day. You've got a previous VPOC. You've got single prints on the current day. You've got the previous day's value area low at the top of the single prints. But on top of that, so from a profile point of view, you've got quite a few good reasons to be having a go at this as a sell. On top of that, when you take it onto a shorter term chart, you've got this liquidation candle. This is where the move accelerated to the downside in the overnight session. It's also a secondary low. We've had this big quick drop that gets rejected very quickly. Excuse me. And then once again another reasonably quick drop that's rejected. It holds 29s on a dip back down, and you see exactly why you get the liquidation there. Those 29s are the significant level. That's the area that is getting bought from, and so it's when it went through 29s, that's where the selling came in. So it was reasonable to then think you should be getting selling from there on the way back up, and that's exactly what we got. We traded 19s, 18s area, so it hung around there for a little while. Then you got this quick flush up to 28, 29 area before we then started to come back off. I'll just show you this now. So we're currently just pushing up above 18, so we're going to get the move up towards 28, 29s, and you'll see on this move that it maybe has a slight bit of pace up there, but this very quickly dissipates, and that's something that's rather helpful. What you then need is, because 18s, 19s was the next area, there you go, up towards 28, 29, and sorry, just for a moment, up towards 28, 29, and it flicks back reasonably quickly. So what you're now looking for is 18s was the next area. That was these lows and the previous high. So we've just broken up above. Now what you want to see is the move back down through 18s, and that's going to be your key level. That's what's going to show you whether this is going to happen, because at the moment, short from 28, 29, you could end up with a market that drops down to 18 and then rallies. So when you're in a trade like this, you've got to think to yourself, where am I right on this? Because until this gets through 18s, you're not yet right on the trade. You are in a good position. You've got a decent placed trade. But until it gets through 18s, this still has the scope to just turn from 18s and rally. So what you're waiting for is you want to see something around 18s. Targets on this, well, you could be looking at this as a full B shape, and a reasonable target would be to play for the new low, and it's exactly what you get. 29s, it takes about an hour and a half and we get a new low, so a full 80 ticks to the downside. Shorter term, you've got these highs here at 06s, and then also another little switching area. This area, these lows, or this low over here, and then where we held below before the move back up. And so you could be looking, I think actually I made a little bit of a mistake here of going for 06s and 90s as my targets on this, whereas really I should have been looking to cover 06s, 90s and try and leave something, perhaps try and run the trade a little bit further. My view though was I can see the move through 18s being reasonably quick to 06s, relatively quick to 90s, and that should be all that I'm really trying to hold on to. So getting back down towards 1890s, not seeing too much activity here, which is not ideal, but always ask yourself when you're in a trade, is this saying to me that I'm wrong? Well, no, it's not. At the moment, yes, it is. It's got a little bit of a bounce off 18, but it's certainly not said to you that you're actually wrong to be short at 28, 29s. So what we're now looking for is still a move through 18s, what that looks like, how the price action moves as it gets through 18s, what that's going to tell you, and whether it does actually give you a chance to add on to this trade as well. So you'd still be watching it here. I don't think there's any reason yet to be thinking that you need to try and add to this just at the moment. Got a little, just tried 20s down. We traded 50 odd lots into 20s and it kept coming back onto the offer. Now trading into 18s as well. It's getting a little bit heavier. Speed picking up a little bit. True way trade here. So you get a little bit more activity. There we go. Now you get 100 lots through the 18s as well. So that could give you a little chance to sell very quickly. Any offers are coming back every time. See, it trades those 17s, the offer comes straight back, and a little bit of size comes in on it as well. So this is looking good now. If you're short through the 18s, whether that be short from 28s or short as we start breaking through 18. Either way, there's two ways of playing it, and if you can see the two ways, then if you get the ideal first entry, you've got a scope to pyramid this trade. Now activity is picking up, but once again, it's exactly what you want to see. You want to see a little bit more activity going through the market. Now it's got a bit more directional as well. The sellers are clearly taking over here, pushing the market down. Very, very little willingness to take any uptick. That then lets you out of the trade a little bit here. Now this very quick shift down now runs into another 100 lot, and all of a sudden that selling speed starts to diminish. A little bit of a worry there, and now the 100 starts chasing back up. So short term, there you go, you can see that 90s chasing up, and again really chases it, and that could actually give you an opportunity to try and sell 10s. But the pace of that little bit of move does give you reason to try and cover something. It's not saying that that it's a false move and it's going to turn back round, but that early pace may say to you, just cover something a little bit quicker. But unless we're getting back up above 18s now, you shouldn't need to worry about this trade, and you should be reasonably confident to try and stay in this trade. And as you can see from the chart, we didn't manage to get back up above 18 before we then continued this move down. And it was once we dropped down back down towards 01s, 02s, you got a very, very similar pattern of selling as that broke. And recognizing that pattern the second time is great, because that gives you confidence to go with it. As that speed keeps coming in, you can keep selling with it and then cover quite quickly. So sell, cover, sell, cover, sell, cover on that type of move down. So it was the acceleration through 18 that I wanted to highlight, as well as the confluence area. The confluence gave you a reason to be in the trade. The breakthrough 18 and that change in price action was what then confirmed you were right on the trade, and that's a key thing. What is one thing to have a good entry price, it's another thing to be shown that you are actually right on the trade.